You know, there are days in the market that just leave you completely breathless. One minute, everything's quiet, maybe a little too quiet. And then the next, boom, a complete explosion of value, a tidal wave of green that just floods the market, adding billions in what feels like the blink of an eye. But here's the thing, it wasn't chaos, it wasn't just random luck. Nope, there's a story here, a trail of clues, and we're gonna follow them. Okay, first, let's just try to wrap our heads around the massive scale of what we're talking about. In what felt like a flash, the total value of the entire crypto market swelled to an incredible $3.35 trillion. I mean, to put that in perspective, that's bigger than the entire economy of most countries on Earth. This wasn't just a ripple, you guys, this was a financial tsunami. And this wave, it hit with unbelievable speed. The market jumped up 4.5% in just a single 24-hour period. Now look, in the regular world of finance, a move that big is like a lightning strike. It just doesn't happen that often. It forces you to stop and ask, what on earth just happened here? And leading the charge, like it so often does, was the king itself, Bitcoin. And it didn't just rise, it absolutely shattered a key price ceiling at $95,800. This was a level it had been banging its head against for weeks and weeks. This wasn't just a move up, this was a breakout of epic proportions. So that really is the million-dollar question, isn't it? Or, I guess, the trillion-dollar question. What was the spark that lit this absolute inferno? What forces all came together at the exact same time to create such a massive, sudden rally? It's a puzzle. And honestly, I've been itching to solve it. And that is exactly what we're going to do right now. Welcome to everything you need to know about finance. We are going to follow the money, we're going to dissect the data, and connect the dots to give you the whole story. Now, real quick before we dive in, just a reminder that this is a deep dive for informational purposes. It is not financial advice. We're just here to figure out the why behind the headlines. And hey, if you find this kind of deep dive interesting, a quick like and subscribe would be amazing. All right, let's get into it. So our investigation starts not with some grand economic theory, but with the raw, kind of brutal mechanics of the market itself. Our first clue is something powerful, and often pretty violent, called a short squeeze. This, right here, this was the spark that lit the whole blaze. And wow, what a spark it was. $591 million. That's how much money in bets against the market was just vaporized, wiped out in a single day. The best way to think about it is like $500 million of pure rocket fuel just got poured directly onto the fire of this rally. So what exactly is short selling? Well, simply put, it's a high-stakes bet that an asset, in this case crypto, is going to go down in price. Traders will borrow it, sell it right away, and then hope to buy it back later for cheaper so they can pocket the difference. But it is a really dangerous game, because if you're wrong and the price goes up instead, your losses can be theoretically infinite. And that's exactly when you get what's called a short squeeze. It is this brutal, cascading chain reaction. First, the market does the exact opposite of what the short sellers were betting on. It rallies hard. Suddenly, they are just hemorrhaging money. Their brokers start calling, saying, hey, you've got to cover your losses, which means they are forced to buy back the very crypto they bet against. And all of that panicked buying just creates more upward pressure, which makes the rally even stronger, which then forces more short sellers to buy back. You see the pattern here? It's a vicious feedback loop that can send a price absolutely rocketing. Okay, so the short squeeze was the match, but every match needs some kindling to really start a fire, right? To find that, we've got to zoom out from the chaos of the trading charts and look at the bigger economic picture. And our next clue? Well, it takes us all the way to Washington, D.C. And here it is. This is our kindling, the U.S. core CPI data. This is basically the government's official report card on inflation. And the market was holding its breath, expecting some pretty bad news. But then the numbers came out, and they were surprisingly good, cooler than anyone expected at just 2.6%. For a market that has been terrified of inflation, this was like a cool breeze on a blazing hot day, a huge sigh of relief. So why does this matter so much for crypto? Well, because cooler inflation means the Federal Reserve is way more likely to start cutting interest rates. And when interest rates go down, investors are suddenly much more willing to take on some risk to find higher returns. And let's be honest, right now there are few things out there seen as higher risk, higher reward than crypto. This data was basically a giant green light for investors to start piling back in. So we have the spark from the short squeeze and the kindling from the positive economic data. But to turn a small fire into a raging inferno, you need a steady supply of fuel. And that's where our third and final clue comes in: the arrival of the big money. We're talking about the institutional wave. Just take a look at this chart. On Monday, spot Bitcoin ETFs, which are these tools for big institutions to invest in Bitcoin, saw pretty healthy $100 million in new money. Okay, not bad. But the very next day, that number didn't just grow, it exploded. It skyrocketed by more than 7 times to over $753 million. This is not your average person buying a few $100s of crypto. No, this is the big leagues showing up to play. And this wasn't just a Bitcoin story either. We saw a similar tidal wave of cash pouring into funds for Ethereum and other major cryptocurrencies. The message here was crystal clear. The big money wasn't just dipping its toes in the water anymore, it was diving in head first. And as they say, a rising tide lifts all boats. So you might be asking, what's giving these huge institutions all this confidence to suddenly jump in? Well, a big part of it is this growing feeling that the Wild West days of crypto are finally coming to an end. There's a new bill being discussed in the US called the Clarity Act, and its goal is really simple: to finally create a clear set of rules for the crypto industry. For years, big money has been sitting on the sidelines, nervous about all the regulatory uncertainty. This bill could be the green light they've all been waiting for. So, we followed all the clues. We have the mechanical trigger, the macroeconomic fuel, and the institutional wave. Now it's time to put all the pieces of the puzzle together and deliver our verdict. What does this massive rally really mean for the future of crypto? You know, to really get how big this breakout was, you have to remember where we were just a few weeks ago. Since early December, Bitcoin was basically trapped. It just couldn't break through that stubborn resistance level of $94,500. So this wasn't just another rally. This was a jailbreak, a really decisive move that signals a fundamental shift in how the big players view crypto. We might actually be witnessing the dawn of a whole new, institutionally driven era. So here's the bottom line, the final verdict. This wasn't just one thing. It was a perfect storm, a powerful convergence of 3 massive forces. You had the short squeeze, providing that initial explosive spark. Then you had the positive economic data that acted as the fuel. And finally, you had the wave of institutional money that came in and fanned the flames. Each one fed off the others, creating this incredible feedback loop that just sent the market into overdrive. And you know, all of this leads to one really fascinating question. Is crypto finally growing up? For so many years, it's been the wild, untamed frontier of finance. But now, with the sheriffs of regulation potentially riding into town and the big money settlers arriving, are we witnessing the end of the Wild West and the start of a new, more mature chapter for cryptocurrency? The future of crypto is, well, it's always uncertain. Let's be real. But one thing is clear. What we just saw was more than just another volatile price swing. It feels like a fundamental shift, a sign that the ground is literally moving beneath our feet. If you enjoyed this deep dive, make sure to try out our latest episodes. We're always following the clues and connecting the dots. Thanks for listening.